Hello everyone, welcome to the market outlook for the week. Gaurang Shah here from Geojit Investments Limited, and as I speak to all of you all this Monday morning, markets have been lower this Monday morning, but some positivity in terms of recovery from the lows of the day of sub 24,750 to currently trading just about 24,800. So let's look and see what lies ahead for this week, this starting Monday morning. So FNO expiry, friends, on Monday, that is 31st of July, Thursday, will keep the markets a little bit of choppy and of course likely possibility of volatility also going up by the time we hit Thursday 31st of July. Maybe Wednesday could be a volatility heavy day in terms of trading activity. Continuous sell side number from the FIs have triggered the correction that we've seen. Last week we did see levels of 25,200 plus levels, and this week we have also seen levels of 24,750 sub levels. So this choppiness and volatility is likely to continue as we go into the week, possibly by Wednesday and Thursday. If there is short covering coming into the market on Wednesday, Thursday, because of some kind of respite on the higher side, that could support the markets on the higher side. So the broad range for the markets that we worked out for this week, 24,700, 24,800 on the lower side where we are trading, possibly we are near the bottom of the market, and expected a recovery to the levels of 25,000, 25,150 with a positive bias on the higher side. Of course, Wednesday and Thursday being one day before and the day of the expiry could be choppy and volatile, but expect some kind of positive moves. The problem, friends, in this kind of a correction and an FIR selling is the earning season for this new financial year first quarter. There have been more misses than hits, and let us be very honest to accept that particular fact. The latest accident that happened last week was on Saturday, Kotak Mahindra Bank, and as a result of that disappointment of numbers, this Monday morning Kotak Mahindra Bank was trading 5% lower. So whatever we have seen up till now in terms of what first quarter earning this financial year has been largely disappointment. A lot remains to be seen in terms of first quarter earnings in the next couple of weeks. Let's hope that there is some positive numbers that we can speak about, and by the virtue of that, market could breathe a sign of relief. But it remains to be seen, a difficult time and situation. Some positive news in terms of trade deals. India signed a free trade deal with UK last night, late evening rather. There was a news flow of US signing or possibility of signing a tariff deal with European Union, that is US and EU signing a tariff related trade deal. Soothing sentiments, but the trade deal between India and US remains to be a little bit far away than what was anticipated. It was announced by President Trump of United States of America that 1st August would be the date wherein India and US will sign the deal. Unfortunately, it doesn't look anywhere closer to 1st of August. 1st of August is this week itself, and there is a lot that needs to be discussed in terms of agreement from both the countries and counterparts. Mid-September is the second date wherein a delegation from US and a delegation of India will meet, and most likely possibility of October being the month wherein the tariff trade related deal between US and India could be signed. Of course, it is approximate month. Date is not clear because there is a lot of difference of opinion as of now. So we'll have to wait and watch for that. FIs, like I mentioned, have been net sellers last week. DIs have been buying on the positive side. India volatility index, we have seen sub 11 levels last week, but this morning when we returned for trade and the volatility, India VIX has climbed up. 11.65 is the level on India VIX, and there is a bump up of 2.95%. Our view is that this VIX India volatility index is likely to go up given the monthly FNO expiry on Thursday, and Wednesday, a day before, it could be choppy and volatile. On the crude oil front, there has been a marginal bump up. $68.73 to a barrel is Brent, $65.38 to a barrel is NYMEX. This bump up in crude oil prices is more because of the US related sanctions on Russia, European visit to China, and unfortunate developments over there, and of course supply side move from Russia to the European Union could lead to natural gas prices and crude oil prices to bump up a little bit, but we don't expect that to be a long last negative factor. We expect crude oil to settle lower. Rupee is 0.06 paise stronger this Monday morning against the dollar, and the level is 86.45. Expect some amount of strength on the rupee towards level of 86.20, 86.25, and crude oil also to settle down a little bit. This week and of course the following weeks will be interesting. I think the triggers are now going to be more dependent on the domestic news flows rather than international news flows. Of course, we will react to international news flows, but earnings is something that the markets is now eagerly watching. Other than that, of course, a stalemate in the parliament in terms of stoppages, progress of monsoon being very, very decent in parts of India, especially where the agri activity is concentrated. Some parts have witnessed heavy rainfall, which has led to flooding and situation of soil erosion. So the setup looks a little bit shaky this week with the FNO expiry and of course what comes out in terms of earnings. But let's hope that since we are trading at closer to the lower end of the band, expect some recovery either on Wednesday, Thursday, or on Friday, supported by short covering. Every Monday when we interact, friends, we give you investment ideas, and we believe there are certain pockets where you can possibly find some respite. And those pockets are pharma, healthcare, stocks related to the Indian capital markets. So these are the two sectors where we are focusing this Monday morning, and we identified two investment ideas. One is a mid-cap pharmaceutical company called Aurobindo Pharma. I think 10 days or a fortnight back, there was a positive news flows for this company and the stock reacted positively. Risk reward being favorable, long-term investment idea is something that we would recommend, but there is a overhang in this sector also in terms of the announcement by the President Trump tariff on pharma over the next couple of months, quarters, next year possibly. But opportunity is there. The second one is from the Indian capital markets. In this correction, friends, what we witnessed is that Indian capital market related stocks have corrected a bit. Now, before I go there, I think it is prudent to give a disclosure. All the fundamental recommendation ideas are a part of our research team. Our company, Geojit or I, we do not have any personal investments in the stocks recommended, nor do we have any financial interest, no conflict of interest either. But we give recommendations to our clients on similar lines. They might have their investment interest in the stocks that are going to be recommended. So these stocks are, first one is of course Aurobindo Pharma, second one from the capital market space, which is corrected. Computer Age Management Services, CAMS. Favorable risk reward again over here. Long term outlook on the Indian capital market looks positive. If Indian capital market does well, we believe stocks, strong fundamental stocks associated with Indian capital markets are also likely to do well. Mind you, friends, these are long term investment idea. These are not BTST, STBT. Have longish time horizon, 12 months, 18 months, 24 months plus. Phase out your investment, start at current levels. On dips you can add to it. No need to go all guns out and buy everything at one time. Have a staggered disciplined approach towards investment in stock market, and staggered investment is what we'll recommend. Again, needless to say, these are long-term investment ideas, so have your time horizon accordingly. Thank you very much for your patience, Yari. I'll see you again next week. Till then, take care. Bye-bye.